Recession fears labeled most overhyped theme of 2019. Recession fears have been labeled the most overhyped theme of 2019 by City fund managers as Investment Association figures reveal billions of pounds rotated out of equities and into bonds throughout the year as markets rallied. Over the year to September, investors pulled £5.5 billion from equities, while the MSCI AC World rose 20.1% in sterling terms and the FTSE 100 rallied 14.3%. Fixed income funds took in £9 billion over the same period, according to YAR figures, which are currently only available for the period up to September. The risk-off trade reflected the views of fund managers, quizzed by Portfolio Advisor, who thought investors took too much heed of the Q4 2018 sell-off and yield curve inversion. The opportunity cost of sitting on the sidelines. Investors climbed the wall of worry and stayed on the sidelines, remaining cautiously positioned, says Suzanne Hutchins, pictured co-lead manager of the BNY Mellon Real Return fund. This meant they missed out on potential returns from financial assets compared to cash. Hutchins pointed to the Q4 2018 sell-off, during which the S&P 500 dropped 12% as the source of investor anxiety. Markets quickly rebounded, but investors were slow to dip back in, with the Bank of America Merrill Lynch survey from February noting cash overweights among fund managers were at their highest levels since September 2009 at net 44%, despite equities rising 5% since the previous survey in mid-January. Investment Association net flows for 2019 equities, fixed income money, market mixed asset property and £19,386, £494, £67, £355, £101, Feb. £19,470, £175, £37, £378, £56, Ma £19, £515, £878, £131, £134, £98, £19, £253, £1,554, £273, £380, £338, A £19, £550, £1,064, £314, £524, £30, £19, £379, £2,620, £199, £391, £61, Joel £19, £1,302, £2,247, £88, £608, £153, Og £19 to £1,577, £842, £36, £706, £91, Sep £19 to £1,691, £794, £385, £845, £81, 88, total £5,517, £8,984, £1,146, £4,053, £902. Caution remained a theme in most monthly surveys from BNY throughout the year. In June, the average cash allocation rose 1 percentage point to 5.6%, the biggest jump since the U.S. debt ceiling crisis in 2011. In September, 38% of fund managers surveyed expected a recession in the next 12 months, and while this was lower than the 58% who did not share that forecast, the response represented the highest net recession risk since August 2009. I probably got most of my 2019 fund picks wrong. A.J. Bell, head of active portfolios Ryan Hughes, and Fairview Consulting director Ben Yearsley both admit 2019 did not turn out as expected. If I went back and read my Outlook piece from a year ago, I'd probably find I got most of it wrong, said Hughes, who had anticipated U.S. Federal Reserve rate rises, a tough time for bonds and leadership change within equities. But in a year where pretty much everything's gone up, his defensive fund picks that he published in a 2019 Outlook at the start of the year have managed to differ more on this story. Visit the news article link.